Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, October 27th, DT Reports video update for our YouTube subscribers. This is a brief update on several markets and what to look for on trade opportunities next week. And I hope that if you enjoy these updates that we have on YouTube, you'll let people know about it and you'll subscribe so you'll get notified every time we have an update, which is generally every Saturday around midday. So let's take a look at a couple markets today. And I hope you watched the video from last Saturday where we identified that the S&P and the other stock indexes had probably made a corrective high, which on this weekly data, this is a weekly chart, and it would be followed by a new low. Well, boy, that's sure what happened over the week. I hope you took advantage of that, as well as the long recommendation that we had in notes or bonds, which have been up for the entire week as well. So a couple great setups. Where are we at now? What should you be looking for early next week? Well, I'm starting with this weekly chart. We're going to move down to intraday charts. But in Elliott wave terms, this past week was what we call a wave 5. And usually this trend will complete in 5 waves. That's a typical Elliott wave impulse wave. Now that's only going to be the first section down, in which then should be a corrective rally followed by another section down that will more than likely eventually exceed the low of last week. But where are we at right now? And the weekly momentums are oversold, and that's in a position where they typically make a weekly low. The price low last week was near the 78.6% retracement. That's a key retracement for declines. And as you'll see in a minute, there's a bunch of other price relationships here as well as time relationships. So here's our daily data. And again, 1, 2, 3, 4, 5 down. And what's key as of Friday, this is Friday's bar, is not only the 78.6% retracement, but it poked a little bit below the 162% external retracement of wave 4, and that's usually about the extreme for wave 5. So we've got another key price relationship right at the low on Friday, and we also have made a daily momentum bull reversal, and that usually is within a bar or two of making what I call a daily low, which in this case should coincide with a weekly low. So that's why it's really important now. We're at extremes of time, price, and pattern, and I should say multiple time frame, time, price, and pattern, and momentum. So we're probably at or very near a weekly low if it wasn't complete on Friday. And Thursday and Friday were two key time factors, both the 100% low to low to low, that was Friday, and Thursday was 100% alternate time cycle, alternate time projection of the time of what I got labeled a wave 3, and 100% of that time fell on Thursday. So two important time factors for a probable low, bull reversal, and the daily momentum right from key price support, multiple time frame price support. Here's our daily, 240-minute momentum. And again, this is that wave 4 high you saw in both the weekly and the daily. And coming into Friday's low, this is a probable 1, 2, 1, 2, 3, 4, 5 to complete a 3, a wave 4 corrective high, and then a new low right in to the probable price target for a wave 5 of 5, and that's the 127, 162% external retracements of this wave 4 and 5. So what we can say is as of Friday's low, we're in 2 degrees of price targets to complete the entire decline from the September high. So that's real significant. And should the indexes trade lower early next week, is the downside should be really limited. So after we've identified if a market's at an extreme for reversal, then we have to identify what does the market have to do to indicate that that reversal is complete. So in this case, just taking out the swing high on Thursday, not too far above the market. And if we take that out, that breaks the bearish pattern. So it not only indicates that this decline from what we got labeled a wave 4, October 17th is complete, But the higher time frame decline should be complete, all the way from the September 21st high. And because that's also a weekly low, we should be at a minimum 2 to 3 weeks sideways to up. Now keep in mind, any advance should be a correction. We call it a wave 2 or B correction because what we're completing now, if it's not already complete, is in Elliott wave terms a wave 1 or an A, and that should not complete a corrective decline, not in 5 sections. Correct. Those are impulse trends, and that should be a 1 or A. We should have a corrective advance followed by then a continuation of the bear trend eventually. That advance should be at least 2 to 3 weeks, probably terminate right around where I got labeled this wave 4 high. That's also around the 50% retracement. That at least be the minimum expectation on the upside. So in other words, what do we want to be looking for early next week? We want to be looking for setups to go long after we take out some minor swing highs for a probable at least 2 to 3 week sideways to up in the stock indexes. Great setup, I think. It's almost a perfect dynamic trading approach of multiple time frame, time, price, pattern, and momentum. So take advantage of that. So the other immediate setup that I'm looking most closely at is the euro. The euro is near a position to complete a weekly low. This is the euro weekly chart, and as of last week, the weekly momentums were oversold in a similar position where the last weekly low was. So it warns us that we're at or near a weekly low, and I think what's even more important is we have two important weekly time factors this past week and next week. So between last week and this coming week, we should complete that weekly low. And one of the keys was last week, the week ending October 22nd, and that is the high to low count. That's usually the extreme of a trend that's going counter to where these two highs were. And that was at the end of last week. And next week is the key low to low. So we're in a 2 week time period from when a weekly low ought to have been made. It hasn't been confirmed yet, but within that time period, we also have our weekly momentum oversold. So that's a wake-up call to look at the shorter time frame, beginning with the daily data. And look at the daily data. The daily momentums are dual look back oversold, and that's from a position to where daily lows are usually made. And why is that important? Because we're also in a position to make a weekly low. So we want to go down to the smaller time frame daily to give us that signal that the weekly low is complete. Because once the weekly low is complete, the euro ought to be sideways to up a minimum of 2 to 3 weeks, and it's typically about 3 to 5 weeks. So it's an important signal that we want to be aware of. And Friday, this is Friday's daily bar, made what we call a two-close reversal. And that means most of you are probably familiar with a key reversal. Where in this case it make a new low and then closes higher. Well, this closed above the last two closes. That's called a two-close reversal, and that's even a little bit stronger. So it's good probability that we've already completed that low. We'll take a look at the intraday data for the initial signal that low is complete. Also on Friday was a real key time factor for a daily low, and that's the high to low. That was on the 26th. And this November 1st next week is the same low to low on the weekly chart that I showed you. So the extreme before we complete this daily low should be next week, but more than likely it was complete on Friday, and just a trade above Thursday's high with a higher close is the initial signal that not just the daily low is complete, but a weekly low is complete. So boy, we're in an immediate setup to start looking at the euro for long trades. We can wait until we take out Thursday's high and close for the day with a higher close like I showed on the daily charts, are for those of you who follow it during the day and look at intraday data, just be looking at setups like minor retracements, maybe down to the 60-minute data. Minor retracements that give you a good risk-reward ratio, minimal capital exposure to enter as long as we haven't taken out Friday's low to enter on the long side for what may be a trade on the long side that won't just last a few days, but possibly a few weeks. So this is a setup you can also consider like ETFs, like the FXE, which tracks the euro with very low leverage, and it's an ETF. Yeah, even if you have a few weeks trend, it's not big gains, but boy, it's a real high probability setup here, whether you're doing Forex or you're doing ETFs or whatever. So look for that early in this week to position long in the euro. Well, that's it for today. I hope you enjoy these Saturday updates. I try and keep them relatively brief and just focus on one or two markets that are in a position for trade setups. So look out for us every Saturday, and do me a favor, pass the word. Let other people know about it. Share this video and subscribe to it, and keep coming back, and let's get our numbers up and see how much help we can be to other folks with this information, because it's not just an advisory. I try to make it an educational experience as well, so that you can apply what you learn to any market in any time frame at any time. That's it for today. Take care. Robert Miner with Dynamic Traders Group signing off.